You're welcome to my channel. In this video, we are continuing with our topic VAT, and we shall start with the key definitions of VAT. First is a taxable person. A taxable person for VAT purposes is a person who is either registered for VAT or one who is not yet registered but is required to be registered as long as they are making taxable supplies as part of their business activity. That is what we call a taxable person. The person might be registered or not, but they're required to be registered because they're making taxable supplies as part of their business activity. Because we said for VAT to be levied, there must be a supply and the supply must be taxable. Yeah. Then we have exempt supply, another term. Exempt supply, something that is not taxed is exempt. So exempt supply is a supply of goods or services not subjected to tax, as specified in the second schedule of VAT Act, Chapter 349. So the supply of goods and services that is not subject to tax, that is what we call exempt supply. Then taxable supply. Taxable supply is the supply of goods and services other than non-exempt supply. So something that is not exempt is taxable, made by a taxable person for consideration, including a payment in cash or kind as part of his business activity. That is what we call a taxable supply, supply of goods and services other than exempt. So it's the supply of goods and services that are taxed, made by a taxable person for consideration, including a payment in cash or kind. The payment can be either in money form or not, as part of his business activity. Yeah. And business activity excludes activities of a person carried as a hobby or leisure. Something that you do as your hobby or leisure, it's not a business activity. A taxable person is subject to VAT at a standard rate of 18%, zero rated, and 5% on sale of residential properties. Then another term we have is zero rated supply. Zero rated is a supply of goods and services which attract VAT at a zero rate, as specified in the third schedule of VAT Act, Chapter 349. So the goods and services that attract zero rate are called zero rated supply. Yeah. Then we look at the standard supply. This is the supply of goods and services which is not exempt or zero rated, and the VAT rate is 18%. Yeah, so we have three supplies: the standard rated supply, the exempt supply, and then the zero rated supply. So standard rated is a supply of goods and services which is not exempt or zero rated, and the VAT rate is 18%. Then we have another term called output tax. Is VAT a taxable person charges on his or her customers on sales made to them? Output tax, it is charged on sales. Then we have input tax. It's a VAT a person is charged on purchases and expenses on a business, both in Uganda and imported. So input tax is charged on purchases and expenses, while output tax is charged on sales. Then we have an exempt import. Exempt import is an import of goods and services. An import of goods and services is an exempt import if the goods are either exempt from customs duty under the 5th schedule of the East African Community Customs Management Act 2004, or would be exempt had they been supplied in Uganda. So an import becomes exempt if it does not pay customs duty, or if it would have been exempt had they been supplied in Uganda. Then a taxable value. Taxable value is the total consideration or price of a particular supply. The price of a supply is the taxable value, and this could be in cash or in kind. Yeah. The total consideration of a particular supply. Then VAT fraction. VAT fraction, this means the fraction calculated in accordance with the formula R out of R plus 100. R out of R plus 100, and this is for VAT inclusive. Then for VAT exclusive is what we call the VAT ratio, which is R out of 100. Yeah. And R is the 18, then out of 18 plus 100. So it's 18 out of 118 for VAT inclusive. Yeah. So those were the key definitions in VAT. Thanks for watching. Don't forget to subscribe, like, comment, share with your friends, and watch my next video. We shall be continuing with VAT.